Alright, I thought I would build a video here for some simple support and resistance. You can see we've got SPY, the Spider's S&P 500 ETF on the chart here. We're using Thinkorswim's platform for charting and technical analysis. I do not trade on this, I just use it for charting. So let's get started, and we'll start with a top-down analysis for our support and resistance. We're going to start with a monthly time frame. It's always good to start at least there for your longer term trades. So you can see where we started out back here in 93, and things were humming along just fine and dandy through the dot-com bubble. And as all bubbles, they pop, and it hit resistance here. So you can kind of see here with your RSI that you got some divergence here. Price action's going up, and our RSI is going down. So that's your classic bullish or bearish divergence right there. So price is going up and RSI is going down. So let's draw a line right here and see what happens. You can see that whenever it come down and decided to come back up, well, we get to here, we look left, and there was resistance, and resistance caught us here. Now, it didn't really help that we had the housing bubble that caused this great catastrophe here, but you can see that resistance, because it had never been used before, it got tested really hard right there, and you can see all that consolidation there, and she went down. So now that we got resistance covered, let's go with support. So apparently there's something supporting in this area. It helps that we got a lot of consolidation here. I'm going to go over here and put our line where my cursor hits underneath that red candle there, and you can see that there was a short period of consolidation here in 1996, and it chose to use that. You can kind of see that it tried to use this support here in this area first, and it failed. But this has a better classic example of support, and guess what? That'll be a pretty, you would think, a pretty decent support area for in the future. But you can see that the housing bubble, it just busted so hard that it didn't really last very long. You can kind of see where on the monthly candle here that it did close here, and it went all the way down, but it closed here. So you can kind of see where there's that kind of support. So that's just something to keep in mind, that just because it's support, it can go on through it, but it's something to keep in the back of your mind. If you bought in up here and you didn't get out, or you're long-term investing, you can kind of see that it, okay, it's going to be probably all right. But just a pretty good classic example of support right here, and you can kind of see on our RSI where we had that period of consolidation. We had the price action go up and then back down. That kind of indicated in our RSI that this last area here where we got a higher RSI value, and that carried us on up into a bit of a bullish trend here. And we'll go over this more later. This is just a RSI, just nothing special set up there. So another area of support, that since we broke through this, we always look back left. And where's our next area? See, we were up here back in 2001, 2002. Come down to that next area of support right there. And you can kind of tell, look, it supported it really well right there. So just a pretty simple, nothing complicated support and resistance, and hopefully this will kind of give you an idea of what you need to look for. So you always want to keep looking left to see where your support and resistance is coming from. And I always like to find something that hasn't been used, because you can see where this resistance, it got used up. So this resistance got used up here, and whenever we went through it again, look, it blew right straight through it. Now that's not going to happen all the time, but usually if it gets used up once, it'll kind of get dodgy right before there and then charge right through it. So just keep that in mind on your support and resistance.